profile itself look different in, say, a strong trend versus a sideways market?
Oh, absolutely. In a healthy uptrend, you'll often see the POC migrating higher along with price. The VAH and VAL will sort of trail price upwards. Pullbacks will tend to respect the value area, finding bids near the VAL.
And in a range.
In a ranging market, the profile often looks more symmetrical, bell-shaped. The POC tends to sit right in the middle of the range, acting as a pivot. You'll see HVNs clustering within the range boundaries. And that's where strategies like buying near the VAL and selling near the VAH, anticipating the rotation back towards the POC can work really well.
Okay, so let's talk specific zones. Using both structure and volume, how do you pinpoint, say, a strong support zone?
Right, so in an uptrend, you'd look for pullbacks towards the value area low, VAL, or a significant high volume node, HVN, below the current price. Then you watch the price action at that level. Are you seeing rejection wicks, pin bars, a bullish engulfing candle? That's your confirmation that buyers are stepping in at that structure volume confluence.
Yeah, resistance zones. Same logic, just flipped.
Exactly. In a downtrend, you'd look for rallies towards the value area high, VAH, or an HVN above price. Then you watch for signs of sellers defending that zone, bearish engulfing, double tops, pin bars rejecting the level.
What about breakouts? You mentioned the LVNs earlier.
Yes, the low volume nodes are your prime breakout territory. When price consolidates, often within a value area or around a POC, and then decisively breaks out through an LVN, that's often an explosive move.
Because there's no resistance in that LVN.
Correct. You look for strong momentum candles slicing through the LVN, ideally accompanied by an increase in tick volume, confirming the participation behind the break. And don't forget those specific candlestick patterns at these key FRVP levels. A pin bar right at the VAH or VAL is a classic reversal signal. An engulfing candle at the POC shows a strong shift in control. An inside bar near an HVN might signal building pressure before a break. Even a doji at an LVN that suggests indecision right before price likely rips through that low volume zone. They add that final layer of confirmation.
Let's maybe walk through a quick hypothetical. Say GBP/USD is trending up on the 1 hour chart.
Yeah.
You draw your FRVP from the last major swing low to the current swing high.
Okay.
Price starts to pull back, and you notice it's heading right towards the value area low, the VAL, that profile you just drew. As it hits the VAL, maybe slightly penetrates it, you see a big, strong, bullish engulfing candle form. Maybe tick volume picks up a bit.
Right, that's a classic setup.
So what does that tell you?
That tells you you've got a high probability long setup. The market respected the lower boundary of the value area. Buyers stepped in with force, the engulfing candle, confirming the structural uptrend, your potential targets. You look towards the POC of that range, or maybe the VAH, as logical places where sellers might reappear or profit-taking could occur. You're building a trade based on confluence, not just a pattern.
Brilliant. That makes it much clearer. Okay, theory is great, but people want to know, how do I actually get this on my screen? Is it complicated to set up?
Not at all, actually. Especially on platforms like TradingView, it's very straightforward. This is where you get hands-on.
Okay, walk us through it. Let's say I've got TradingView open, you're USD, 1 hour chart. What do I click?
All right, so on the left-hand toolbar where you find your trend lines and drawing tools, click that icon. It often looks like a ruler or has geometric shapes. Scroll down that menu and you'll see an option labeled Fixed Range Volume Profile. Just click on that.
Okay, got it. Tool selected. Now what?
Now you tell it where to measure the volume. Click once on the chart where you want the analysis to start, typically a clear swing low or the beginning of a consolidation. Then just drag your mouse across to where you want the analysis to end, maybe the recent swing high or the end of that consolidation period. Click again.
And bam.
And bam. The volume profile histogram should appear vertically along the price axis for that range you just selected.
Enough. Any settings we need to tweak?
You can customize. Yeah. Right-click on the profile itself and choose Settings. You can adjust the row size, which affects how granular the profile looks, change colors if you like. But the absolute most important setting, in my opinion, is a checkbox usually labeled Extend Lines or similar. Make sure that's checked.
Why is that so important?
Because it projects the key levels, the POC, VAH, and VAL, across your entire chart to the right. So as new price action unfolds, you can see how it interacts with those crucial historical volume levels without having to constantly redraw the profile. It keeps them relevant.
Ah, okay, that's super useful. And reading the output visually.
It's pretty intuitive once you know the terms. The longest horizontal bar, often highlighted, is your POC. The shaded area around it is the value area between VAH and VAL. And the really skinny sections are your LVNs.
Now, about choosing where to draw at the anchoring points. You mentioned swing low shies, consolidation. Any best practices there?
Definitely. The key is to anchor it around a meaningful price range. A completed swing move, a significant period of sideways consolidation, maybe the range of the previous day or week. What you don't want to do is just randomly select a small, insignificant wiggle on the chart. The data won't be meaningful. Context is everything. Choose ranges that represent a distinct phase of market activity.
Makes sense. Garbage in, garbage out, basically.
Pretty much. And here's a time saver. Once you get the settings looking how you like the colors, the row size, those lines extended, save it as a template in TradingView.
Good tip, so you can apply it instantly later.
Exactly. Keeps your analysis consistent across different charts and time frames.
Are there common pitfalls people hit when setting this up? Mistakes you see often?
Yeah, a few common ones. Like we said, anchoring it to too small or irrelevant a range that gives you noise, not signal. Forgetting to extend the POC, VAH, and VAL lines is a big one. You lose the